Okay, Tesla, here we go. Stock 301. Lots of bad news. We know that. This, that, and the other. That's already been out. We had a short put spread, which did fantastically last week. Yes, Gary, that's exactly right. Okay. Earnings coming up. Based on their earnings in the past, I am fairly bullish. I'd say mildly bullish, not overly, but I think that there is so much out there already. I think their downside could be fairly limited. One thing we had looked at on TD, if for those of you that watch, and if you didn't, that's cool, that's fine, is selling a an iron condor, but with a bullish bias to take advantage of all of the premium. So let's first measure what the expected move is. Okay, what is the expected move in Tesla? Yeah, it's about 29, 30 bucks, almost 10% move. Exactly. So let's get this up on the board here. Stock is 301.50. Expected move is about, we're going to put it at 30 bucks, which gives us an expected range then of 271.50 up to 331.50. Okay, if we look technically here, you've got lots of support in that area, and likewise, I wouldn't say as much resistance, but you've got the 50-day moving average, you've got this gap back on January 14th that is right at that area. Okay, so I think those are two really good areas to look at for support and resistance. Okay, so nice support and resistance at those levels. From an emotional, psychological, and fundamental side of things, Tesla has the history of actually popping up on earnings a little bit. So that's why I'd love to sell an iron condor, because I do think it's going to be range bound, but I'd like to also skew it a little bit to the upside. Meaning, rather than going all the way down to 271 break even on the downside, I'm willing to up that a little bit and then up the upside call side a little bit to give us some extra room. So for example, maybe we look at something like the 285, 280, and then the 335, 340. I don't know if that's going to give us enough credit here. Maybe we cut that just a little bit here. Maybe we look at the 332 half, 337 half. Okay, if we could get 250 for this, guys, I like this a lot. It definitely cuts the downside limitation a bit here, and maybe we can adjust our strikes to the downside here and still get about the same amount of credit here. Okay, let's see this for 2.25. The 280, 275, and 332 half, 337 half iron condor. Let's say we could get 2.25. if we could, the break evens become 277.75 up to 334.75. So like I said before, a little bit tighter on the downside. And a little bit extra room on the upside. I'd actually like to get a little bit more, so I'm going to look at adjusting the downside strikes here up one. That doesn't, yeah, that's 235. I know I'm talking to myself here, so just hang with me. This I like better. This I like better. So this one, Michael, I know it is low, but remember we're going outside of the range to the upside. Okay, so this is the 282.75, 277.5. Well, 282.5, excuse me. 277.5, and then even raising the upside even further. So this gives us a break even then of 280.25 up to 337.25. I like that a lot, guys. Okay, so I don't want to put this out yet. I want to wait a little bit longer like we did yesterday with Apple because I want to get a better starting point for Tesla because it may be a lot different in an hour or an hour and a half from where it is right now. But this is kind of what I'm thinking here. Absolutely not, Michael. Vantage point for an earnings play like this is useless. Vantage point for or any other trend type of software is useless when you're looking at an event type of trade. Longer term, definitely, definitely something to look at. Okay. All right. So that's what I'm looking for here in Tesla. Let's move right on, guys. Let's move right on. We have so many other things here. CREE. CREE is a CREE is a supplier, or I'm sorry, it's in lighting, LED lighting. It certainly looks like this thing is getting ready to break out on the upside. If I bring in this chart here, it certainly looks like after the third time being the charm here, this may be the one. And we've started to see higher highs, higher lows. Yep, LED. Okay, expected move in CREE, everybody. Yep, about $4. Okay, CREE equals 48.85. Expected move is about $4. Technically, to me, it looks like it's really about to break out. So we'd be targeting really around 53 or so. Okay, I like this broken wing call fly here. Okay, what do I like about it, Jennifer? It's all technical. It's all technical here. Higher highs, higher lows. I wish this would stay there. There we go. And there's been some resistance right here, which it just a couple days ago did break through. But there's this pattern here, higher high, higher lows, and there's a lot of pressure moving on the upside here to break through this high here. That's what I like about it. That's what I'm looking to try and take advantage of. Okay, so I'm looking to see if there is some sort of upside play that makes sense. All right, guys, I'm going to put a signal out here in this. Any questions? This one I am going to put a signal out here. Okay, Tesla we're going to come back to. This one I am putting a signal out. All right. Yep, I am recording, Michael. I'm going to go off the recorder right now. I'll post this up in the room, and I'll be right back to discuss the next one. Dave, when you say more risk, you mean to get more aggressive to the upside? Well, yeah, if you just want to put more of the spread on, yeah, you still do it in the same ratio. It's definitely still 1 to 2 to 1, but you would just do more of them. All right, I'll be right back, guys.